They aren't telling you everything about the first home guarantee. With the federal government making changes by lifting property price caps and removing income limits, mortgage brokers everywhere are expecting to make a boatload of money because of the new requirements or the new legislation around the first home guarantee. In reality, there's a bunch of bullshit that hasn't been explained properly. I'm Joseph Dalwood, founder of It's Simple Finance. I've got a decade's worth of experience in property and mortgage lending, so believe me when I tell you there are 5 things they aren't telling you about the first home guarantee. Let me quickly disclose something. The information on this channel is general in nature, and if you do need specific advice, please consult with your finance professional. So what is the first home guarantee? If you've heard this before, skip ahead so I don't bore you with any financial jargon. The first home guarantee, which I'll call the FHG from now on, lets first home buyers purchase a home with a minimum 5% deposit and avoid paying lender's mortgage insurance, otherwise known as LMI. The federal government comes and acts as a guarantor for up to 15% of the property's value, which saves you a massive fee. For example, on an $800,000 apartment, you'd save around $35,000 in LMI. It's not a bad scheme. It's been around for over 5 years. The reason it's all over the news is because from October 1st, 2025, a lot of the old requirements have been removed. There are 3 major changes to the first home guarantee. They have removed the eligible amount of people that could purchase together, including friends and siblings. What do I mean by this? Well, previously, the maximum amount of people that could purchase together was 2. Now, up to 4 people could purchase a property together using the first home guarantee. The second thing is there's no longer any income limits. You could be earning over $500,000 a year and competing with someone who earns $100,000 a year. And lastly, the price caps across all the states have increased, but there's a bunch of other things they haven't told you. So here are the top 5 things they haven't told you about the first home guarantee. So what's the first thing they're not telling you? You can only use this for owner-occupied properties. You've heard it time and time again. You could buy a property with just a 5% deposit. Buy a property with just a 5% deposit. Buy a property with just a 5% deposit. Regardless of what the Prime Minister, your real estate agent, or your uncle at a barbecue has told you, you can only use this scheme if you are an owner-occupier. That means you have to live in it. Now, to be fair, this is very clear on the government website criteria, but there is so many people telling you that you can abuse this scheme and use it to purchase an investment property. This is bull. I don't care what your buyer's agent tells you. They don't have your best interests at heart. All they care about is their commission. Mark my words, there's going to be some dodgy buyer's agent on a current affair in the next 6 to 12 months trying to cheat the system. Why? Because when you purchase an investment property or you apply for an investment loan, you can borrow more money. What do I mean by this? Well, let's go to point number 2. A 5% deposit is not enough. You need to be able to afford the loan. I'm going to repeat this. It's not enough to just have a 5% deposit. You have to be able to service the loan. Let me show you what I mean on my iPad. Okay, the service I'm using here is a tool called Quickly. It's a mortgage broker tool used to compare borrowing capacity across the market. Now, here I've got my example. It's called the YouTube example. They live in household 1. They are single, and their postcode is 2000 because they live in Sydney. Now, the average salary in Sydney, well, for females, it's $94,000. For males, it's $104,000. Put those two together, divided by 2, you end up with $99,000. So I'm just going to use $99,000 here. I'm going to quickly scroll down. This person has no HECS. This person has no existing home loans. We're going to turn their credit cards off. They're not going to have any credit cards there at all. And they've got basic living expenses. So let's have a look at how much they can borrow. When we go over here, you might see lenders like Brighton, Wave Money, Liberty, Wealth, Apollo. They are going to lend you over $600,000. You might think to yourself, oh, that's okay. I can work with that. These lenders are not partnered with the first home guarantee. When you're applying for the first home guarantee, you are usually looking at the major lenders in order to be able to access the scheme. So let's scroll further down. So we have our first of the big 4 right here. ANZ, $569,000. St. George, $566,000. Bankwest, $561,000. CBA's $561,000 as well. And our good old friends at NAB, also $561,000. Now, this is a perfect world scenario where this individual has saved a 5% deposit and they want to be able to buy something in the market. let's say they also have regular liabilities like everyone does across Australia. So what I have done here is I've actually added in their HEX debt. So that means that they're paying a fortnightly HEX. And I've also added in a $5,000 credit card because we all get approached by the banks when we turn 18 years old to go and apply for a credit card, not knowing what it actually means. If you see here, the borrowing capacity has dropped massively. If we scroll all the way down, ANZ, your borrowing capacity has now dropped to 491,000, NAB 485,000, CBA 485,000, St. George and Westpac $483,000. So if you're a first home buyer and you're looking to purchase something using this scheme in Sydney and you want to do it on your own, what can you really do with a 5% deposit and a $485,000 loan? You're probably going to be able to buy a property worth about $520K. If you live in Sydney, let's have a look at your options. So I'm going to go to buy. I'm going to hit filters. I'm going to look at all types of property. My price range is going to be between $475,000 and $550,000. I'm only going to show properties with a price because I don't want my borrowers going to an auction and then all of a sudden being disappointed because somebody outbid them by $150,000. I'm not going to choose whether it's a new or established property. I'm not going to really highlight any features. But what I do want to do is hit search. So across Australia, we've got 9,564 properties. That's fantastic. Well, let's go to the map. I'm now going to zoom in. I'm going to zoom in even further. I'm going to zoom in even further than that. I'm going to zoom in even further than that, and even further than that, and even further than that. So this is going to be my catchment area. This is Greater Sydney. So now I'm going to hit back, and it's going to tell me how many properties we have. So I have now updated my map to just be Greater Sydney. I'll zoom out a little bit more just so I can include a little bit more of Campbelltown and the southwestern suburbs of New South Wales. And we have 510 properties that we could choose from. We've got nothing along the east. We've got one property over here. It's a $500,000 studio apartment. That's in Botany. We've got one more over here. It's a $490,000 studio apartment. Doesn't even have a parking spot in Neutral Bay. Let's go closer inner west. Oh, we've got a 2-bedroom, 2-bathroom apartment over here in Parramatta. Over here, we've got another $500,000 property. But what we have done is we have inflated the market and told everybody that you can go purchase a property with just a 5% deposit. All of a sudden, if they couldn't purchase before and their borrowing capacity is only $500,000, you're going to have a lot more people compete for these 500 properties. In New South Wales, we have had so many people migrate to our state, and all of a sudden, there's only 510 properties they're applicable for. That's not that many when you really think about it. So let's go back here. We've got the perfect world example for a single borrower. They could borrow about $580,000, but let's be real. Everybody has HEX. Everybody has a credit card. Everybody's got some sort of car loan. So we're going to stick with this scenario here. And as you guys can see, there's not many options. The reason why you're going to have buyer's agents come out and say, hey, just mark it down as an investment and that'll work. This is what happens. And I called this the bullshit investment scenario because this scheme is not applicable for people looking to purchase an investment property. So we've got $99,000 here. We're going to turn the HEX back on. We are also going to reopen their credit card, but we are going to say that they are purchasing an investment property. They've got a weekly rental income of $500 and they've got investment expenses of $150. We're going to say that they're living with their parents as well. This is something called notional rent, and the banks usually charge about $750 for it. Look how much more you can borrow now. With ANZ, you could borrow $775,000. You could purchase a lot more properties if your borrowing capacity is $800K, but that is not the case. With the first home guarantee, it needs to be an owner-occupied property. So that is why you're going to have a lot of buyers agents turning around and saying, hey, just make it an investment. That does not work in this scenario, guys. The government has rules, and so do the banks. Even with the government removing its income caps, the banks still have their own brutal serviceability tests. So make sure you can afford the loan if rates go up. Now, here's the second issue I have with this scheme. The government has said that you might be able to buy a property for up to $1.5 million. In Sydney, to do that, a couple with no kids and no debt would need to have a combined income of about $250,000 a year. Only the top 12% of couples in Australia earn that much. As we could see here on my maximum borrowing capacity calculator, I've got $125,000 for partner one. I've got $125,000 for partner two. They don't have any dependents. Neither of them has any HEX debt. They're looking to purchase an owner-occupied property. It's a 30-year mortgage. There's no credit cards. There's no notional rent. Guess what? They are just able to squeeze in and borrow the maximum amount of $1.5 million. But let's say this is a real-world example for a couple. So we're going to take the average salary of a first home buyer for a male and an average salary for a female. That's $198,000 as a household. We are also going to include the fact that one of them has a credit card. And guess what? One of them probably has a Hilux, so they've probably got a car loan as well. Also, one of them still has a HEX debt. Let's see how much more that drops. So now, all of a sudden, with the major banks, to be applicable for the first home guarantee, you're looking at about $940,000. And I am not saying that this is impossible, but you have the Prime Minister going up there and saying, you can purchase with just a 5% deposit. You can purchase a property with just a 5% deposit at 1.5 mil. But let's say you're in that group. Let's say you've got all that. Let's say you've got a $75,000 deposit and you want to use the scheme. Let's say that somebody got a pay rise and you're now earning $150,000. You can just go buy that house, right? Wrong. And that brings me to reason number 3. The first home guarantee and stamp duty concessions are two different things. The first home guarantee does not include a stamp duty exemption. If you think a 5% deposit is enough to buy a property, think again. Stamp duty is a state tax. This scheme is federal. That means you still have to pay stamp duty. This is the trap. The maximum price caps for the first home guarantee are well above the stamp duty concession thresholds in almost every single state. In New South Wales, the first home guarantee price cap is $1.5 million. But the stamp duty exemption for first home buyers cuts out at $800,000. Your concession only goes up to $1 million. So if you buy a house for $1.5 million, your 5% deposit is $75,000. But your stamp duty is going to cost you an extra $67,000. In Victoria, it's even worse. Their maximum price cap is $950,000, which means their deposit is $47,500. For a $950,000 property in Victoria, your stamp duty is over $52,000. That is more than your initial 5% deposit. So I know we've heard it time and time again. Is it just a 5% deposit? No, it's a 5% deposit plus affordability plus stamp duty. And that's just to start, which brings me to point number 4. The government guarantee doesn't just disappear. I want to circle back to my first point about having to live in the property. For stamp duty concessions, you usually have to live in the property for 6 to 12 months. That is not the case with the first home guarantee. As long as the government remains a guarantor on your property, you cannot turn it into an investment. The government is cracking down on this. If you want to turn it into an investment, you need to wait until your loan to value ratio is below 80% and then refinance your home loan to remove the government as a guarantor. That is only possible if your property has grown in significant value, because it's unlikely you would have paid off that much debt in that amount of time. Let's say we go into a flat or a falling market. It could take you years to hit that 80% mark. During that time, you might be frozen. You won't be able to top up your loan for any renovations. You can't switch to a cheaper lender without losing the guarantee and having to pay LMI. If you make the property an investment property prior to removing the government as a guarantor, they can force you to pay the lender's mortgage insurance that you tried to dodge, plus a fine. How do I know this? Because this has popped up in the news. So if you try and use this as an investment too quickly without taking the correct precautions, you might have to pay that LMI anyways, plus a $2,700 fine. And number 5, you can't reuse this scheme, and buying with your mates is a trap. So they've lifted the cap on how many people can purchase together. Now, I don't know what the government was thinking when they decided, hey, we're going to allow 4 individuals to purchase a property together. Let's say you and 3 of the boys get together. You decide that, hey, you've got 10K, you've got 10K, you've got 10K, I've got 10K. We're going to use $40,000 for a 5% deposit to go and purchase an $800,000 apartment. You're in the property market sooner. You're thinking to yourselves, oh, this is perfect. We might be able to do something here. We might be able to renovate or build something along the lines of that. There are so many issues when you try and purchase with multiple people. But let's say the 4 of us, we did get together and we purchased a 2-bedroom apartment. Guess what? This scheme is for owner-occupied properties only. So all 4 of you have to live in that 2-bedroom apartment. What happens if one of the boys gets married? What happens if one of them gets divorced? What happens if one of them wants to move out? You have to notify the government of any of your future plans and make sure that they are well aware. And guess what? You might still get hit with lender's mortgage insurance because one of you moved out, and that means it is no longer their principal place of residency. It could be deemed as an ineligible first home guarantee, and they might remove that and force you guys to pay the lender's mortgage insurance. But here's a better thing. Let's say the four of you own that property and one of the boys gets married. Let's say his partner has never owned property before. She's not allowed to use the scheme because her partner has used it prior. Let's go one step further. What happens if they get divorced? Does that mean that that partner is now taking all four of you to divorce court? How are you going to split that four ways? Is the government also involved in that case? This hasn't been thought through. All they have tried to do is pump the market up. So before you go and jump in with a couple of your boys and go and start this new exciting venture, this can turn into a financial and emotional nightmare. So please be considerate of everyone and think it through before you go and do something like this together. So there you have it, guys. There's 5 things that they aren't telling you about the first home guarantee. If you take anything away from this video, it's the importance of speaking to a finance professional before you apply or before you purchase a property. Whether it's a recommended broker, financial planner, legal professional, or even a buyer's agent that you actually trust, make sure they are well aware of the restrictions within this scheme. If you need help making a purchase or you want to speak to one of our brokers, visit us at www.itsimple.com.au. If you want to learn more about money or property, click subscribe on this channel, make sure you hit the bell, and thank you for watching to the end of this video.